Joining us now is CNBC's Phil LeBeau, along with Ford CEO Jim Farley, in a first on CNBC interview. Phil.
Thank you, Morgan. Jim, you beat on the top and the bottom line in the fourth quarter, but your guidance for 2025, that may be where the pressure is coming from. You're forecasting a drop in the full-year profit as well as free cash flow and within your divisions. Why the guidance there that is a little cautionary?
We think it's prudent. There's a lot of external factors, as you know, Phil. But our future's really in our hands. We have this cost opportunity at the company that we've talked to you about, and that's really where our focus is.
When you look at what's happening with the potential for tariffs, I mean, you guys dodged a bullet with the Canadian and the Mexican tariffs being at least postponed for 30 days. But have you conveyed to President Trump personally how much this would hurt Ford and relative to foreign automakers in this country?
Well, look, Phil, as you said, if this persists, this tariff persisted with Mexico and Canada, it would mean billions of losses for the domestic car industry, huge impact for jobs in the U.S. And the administration knows that, as well as congressional leaders. They know that Ford is the most American car company. We produce the most. And they have committed to us to strengthen our industry and not weaken it. So we expect them to work through these policy ins and outs. As far as tariffs are concerned, we want a comprehensive policy, not just towards Mexico and Canada. We understand all the pressures on the border and with drugs, but the reality is, Hyundai, Kia, and Toyota can import millions of vehicles through South Korea and Japan without these tariffs. We need a comprehensive look at such a tariff change.
Jim, it's Morgan. It's great to have you on the show. It's not just Mexico and Canada either. It is rising trade tensions between the U.S. and China. You have a China business for China, but also export out of there as well. You've also talked about the quote-unquote existential threat of Chinese EVs on the global stage. How are you gaming out business in China and those trade dynamics where that country is concerned?
Well, first of all, thank you for the question. We were profitable in China. We decided a couple years ago, we saw this price war coming in China, and we went to a low capital strategy with export into some of our international markets. We now made almost $1 billion in China, and actually the leader of that business is now going to be leading our whole international group. Look, those are very fit companies, BYD, et cetera. They're in a price war now in their home market, but that fitness is going to show up on our doorstep quickly here around the globe. And it's on us to be fully competitive with the Chinese on cost. They get a lot of subsidies from the government, so we have to work with our government to make sure it's a fair playing field. We're confident that we can do that with the new administration and congressional leaders, but this is a competitive threat we have never seen in the auto industry.
Jim, it's John Ford. I want to ask you more specifically about cost. You just got through these negotiations with the United Auto Workers. There's some more labor costs there. Certainly, there's the potential of some really uncertain costs in the supply chain with tariffs. How does that affect your cost reduction strategy? Where do you think the Trump administration can help you on the cost line?
Well, that's a great point. First of all, our future's in our hands, as I said. So there are a lot of costs coming into the business, but we still have lots of levers to pull. Where the administration can help us is matching kind of the CO2 requirements for our fleet versus what customers are willing to buy. Right now, the price war in EVs is largely led because OEMs are, selling these EVs and they're reducing the price to cover the volume so they can, they don't have to buy credits for CO2 so they could sell the profitable vehicles like our F-150. And we're getting a lot of artificial pressure in the market on pricing because of EVs. So how the administration can really help us is have a good policy a policy around tariffs, as well as really smooth transition for what we're going to do on tax around EVs. But most of all, it's going to be that CO2 policy for the EPA as well as the ZEV states in California.